Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish, dropping the hammer on cash flow problems so you can build things that matter. This week's topic is going to be tax implications of hiring employees versus contractors. This is a topic that is pretty much a chronic topic, a thing to consider, especially in construction. There are a lot of times where employees or contractors are misclassified, or employees are misclassified as contractors. And so this is a topic that we do come back to pretty regularly because it is something that you will run up against pretty much over and over, especially in the construction industry. So kind of why does this actually matter? Far too often, unfortunately, employees or workers are actually misqualified. They're misclassified as contractors when in fact they are employees. And in that misqualification, if in fact you are, and one of the things we're seeing in a lot of states is some of the state agencies are coming around and actually making note that people are not, in fact, contractors or employees. And so when that happens, unfortunately, when they are what is called reclassified, you could be and subject to potentially some pretty significant penalties and interest on back payroll taxes, and so on and so forth. So it can be quite expensive if you are actually forced to reclassify people that are misclassified. So that is something to think about. And it's going to be different state to state. Unfortunately, there is no kind of standing rules across the states. That's the downside of doing business in some of these states. One state does one thing and another does another. This can, misclassifying people could potentially affect your cash flow. Again, always a problem, right? It could potentially impact your payroll, any of your cash flow, how you manage your team, right? So when you have people that are quote unquote contractors, they technically are not your employees, and therefore your ability to manage them changes because they, in theory, don't work for you as an employee. So the control per se, and that we use that term, control is used a term when classifying employees, becomes something that you think about and comes into play. So it might be you might be managing people differently. And a contractor is managed one way, an employee is managed another. And the reality is that you are probably affecting your overall long-term planning and your compliance, right? So the actual compliance regulations for an employee are going to be different than a contractor. So what you're filing with your various agencies, your state agencies, your federal agencies is going to be different. And so you want to make sure, number one, you're compliant with what the rules are. But if they are misclassified, again, now you're not compliant with the state or the federal regulation. So there's a number of things that kind of come into play and make the difference between a contractor and employee important. So kind of what's the difference, right? So an employee is on payroll. And when I say on payroll, these are the people that you are processing a check to. In most cases, our clients are processing payroll weekly. You're using a payroll service of some kind. They are having taxes withheld from their payroll. So if you are in a state where there are state income tax, so there's going to be federal withholding, there'll be state withholding in the applicable states. There will be FICA withholding. You, as the employer, will be paying payroll taxes associated with that individual. So, for example, FICA, you'll be matching the FICA contributions. You will be paying state unemployment, so SUI in the state that you're in. That is what an employee is. And I know I've seen it with our clients. Sometimes the word payroll is used as just a generic term, even for their contractors. Oh, well, I pay my subs or I pay my contractors weekly and they're on payroll. Well, they actually aren't on payroll. Your payroll is actually going to be the people who are having their taxes withheld, and that you're matching the payroll taxes and then you're paying SUI taxes on them. So that's what an actual employee is. When they are an employee, you have the ability to control how, when, and where they work. So when they start their day, when they end their day, what job site you're sending them to. Are they working in your office? Do they have a company fronted email? Do you have processes and procedures that they have to uphold and follow as an employee? You have control over what it is they're doing, how you brand your business and how they are reflective of your brand. They might be wearing branded shirts. They might be driving around in your branded pickup trucks. Those are people you have control over. The word control does mean different things to various agencies. So, control to the IRS is going to be slightly different. So, there'll be a test for control that'll be slightly different than the Department of Labor's control test. But in most cases, there are a number of similarities between the two. But your control over what they're doing and how they reflect your brand really kind of sums up how and why they are, in fact, an employee. Again, as I mentioned, you're going to have taxes taken out, right? So you're going to have the FICA. So that's going to be your Social Security, your Medicare, federal withholding. Again, if you're in a state with state income tax, there's going to be state withholding. And then you, as the employer, will be matching the FICA as well as paying into the state's unemployment system. And then employees may, in fact, be eligible for benefits. So, do you offer health care? So, they might be eligible to get health care through your policy. You may offer retirement, 401k or a simple IRA where you match what they're contributing or you match to a percentage of what they're contributing. Those types of people, those are employees. They are eligible for benefits, right? So they're on payroll, they're having taxes taken out. You have control over what they're doing, and you, in fact, can offer them benefits, healthcare, life insurance, retirement, etc. So, what is an independent contractor? Who is an independent contractor? That's an individual who's going to be self employed, right? Works for themselves, and they offer you services. Your independent contractor is typically going to work for not just you, but for other people also, and go from job to job and kind of making their own schedule as to which jobs they want to work on and so on. They have more control over their own work schedule. So I have, I'm an actual independent contractor. I work at this project for this week, and then I work for another, general contractor next week, or then for the next 2 weeks as I'm working on this project over there for them. That is an independent contractor. If they're working simply for you, in most cases, they're probably not an independent contractor. They are most likely an employee. So that independent contractor is going to offer you services, work for different people, have control over their work schedule, when they work, when they don't work. You are not going to withhold any taxes from any of the payments that you give to them. It is that individual's ultimate responsibility to report back any of their income and expenses, et cetera, under whatever entity structure they may or may not have, and they report that back. And you are not going to offer them benefits. So you cannot offer them health care. They cannot take part in your 401k if you have one. So those are really the big differences between the two. There's no control, there's no taxes taken out, and they are not eligible for the benefits that you offer. So, what are your responsibilities from a tax perspective for employees? And then, what are your responsibilities from a tax perspective for your contractors? So, for your employees, you're going to have to withhold payroll taxes. At the minimum, you're withholding the FICA, so the Social Security and the Medicare. You're most likely withholding federal income tax. Again, it depends on what you're paying this individual. If you are in a state that does have a state income tax, you're typically withholding state income tax. So, as the employer, you are responsible for remitting all of the taxes you've withheld on behalf of that individual and remitting them to the specific tax authorities on that individual's behalf. you have to file a W-2 for that individual at the end of the year. So that person is going to get a W-2 from you by January 31. And most of our clients are utilizing payroll services. So these are all processed by the payroll service by the close of January for the prior year. And it's going to note the gross payroll they received, any withholdings they've had, federal, state, FICA, etc. If you do have, for example, benefits, you offer retirement, there will be a reflection of that retirement if they contributed to it somewhere on that W-2. You have a responsibility as an employer to remit that to the taxing authorities by the close of January for the prior year. Again, you're paying quarterly payroll taxes. So you're paying into the Social Security system. So sometimes it's called FICA. So you are paying Social Security and Medicare on their behalf. You're withholding from their payroll, and as the employer, you're matching it. You're paying quarterly payroll taxes to the state that you're in. So there's going to be potentially unemployment insurance in the state that you're in. So you're paying into that state system. Regardless if your state has income tax or not, as an employer, you are paying into the unemployment system for that particular individual. So there are specific compliance requirements. There are going to be quarterly payroll tax compliance requirements and annual payroll tax compliance requirements that you're going to need to meet, as well as remitting these tax deposits periodically, whatever schedule that you are on, and it depends specifically on how much your deposits are each year. So you may have to remit after every payroll. You may have to remit monthly. You may have to remit quarterly. It's going to depend on the business you have, but you have a requirement to meet those compliance requirements and remit those federal tax deposits based on the schedule that you have been provided based on the type of entity that you are. So let's talk about what your tax responsibilities are for your contractor. You are going to file a 1099 for that contractor if you've paid them more than $600 in a year, and you're going to submit that and remit it to the contractor by the close of January for the prior year. So you have one annual compliance requirement with regard to a contractor. And this is going to be a contractor who is providing a service to you. You're not going to withhold any money, any taxes whatsoever for that individual, no federal, no state. They are responsible for their own taxes. You are not paying into the state's SUI system. You're not paying, you're not matching FICA. You're not remitting any tax dollars on behalf of that individual. And again, all of that is the response. So all those tax responsibilities fall on that individual contractor. You don't have any responsibility. You do not have to remit quarterly taxes related to, what you sent to them or paid to them, because there aren't any requirements. You simply have one annual requirement with your contractor. So let's talk a little bit about, there's a couple, like they call it the control test, right? Like, how do you classify the two individuals, right? So you're going to have the behavioral control. Do you tell them what time they come in? They have to be at the job site by 8 a.m. and they leave the job site by 4 p.m. That's control. That's an employee. That's not a contractor. So you've got to control over what they're doing. Do you control how they communicate with your customers or the end user? Those are the types of things. That's what's considered behavioral control. Then there's going to be the financial control. So financial control ultimately will mean if you're an employee, they're getting paid on your schedule. For example, if you're paid weekly, you're paying them on a weekly basis based on, again, whatever hours they worked the prior week. If they are a salaried employee, again, one portion of their salary, their 1 week's worth of their salary for, their annual salary. That's financial control. When you're when you're a contractor, you're an independent contractor, you have your own, you have to send an invoice to that particular company and for your work or the time or whatever you've contracted with them. So the financial control ultimately for that individual lies with what they're going to do and how they're going to pay their own taxes, but you're not subject to having to pay them every week on a standing weekly schedule. They remit an invoice to you, you have payment terms, 13, 14 days, 30 days, whatever it is, you pay that invoice. So there's different financial control between the two types of individuals. Again, your employee is going to be paid on a standing schedule, weekly, bi-weekly, however it is that you pay your employees. Your contractor is going to give you an invoice for the work they've done. Maybe it's for a portion of the scope, whatever it is, however you've contracted with them, because you have in fact contracted with them for that service. So they're going to remit an invoice to you based on that. So possibly on a monthly basis or only when they hit milestones. So again, you've got behavioral control, you have financial control. What type of relationship do you have with them? Again, if you're a contractor, you're coming and going off of that job site, out of that, in and out of that service based on your own schedule. There will be some qualifications to that, especially when you're working on construction sites. For example, if you're an electrician, they want the electrician to come in, roughly at this time because the electrical's getting done here and then the plumbing's getting done here. And then, the walls are, the sheetrock's going up here. And right, there's all reasons to do all of these things. So there is a bit of a schedule when you are a contractor, but when you work for somebody else, they're telling you where you're going, when you're going there, what time you're getting there, and how you are behaving when you are actually there because you're a reflection of that brand. There can be consequences to misclassifying these individuals. If somebody is being paid as a contractor, but you are telling them where to go, when to be there, what time to be there, what day to be there, exactly they're going to do and how they're going to do it when they're there, and they're in your branded clothes and they're in your branded truck, that is going to be an employee. So if they get reclassified as employees, you would be on the hook for back payroll taxes, Social Security, paying into the SUI system in the state that you're in, et cetera. There could be fines associated with that. The taxing authorities have their one set of fines. The Department of Labor has a different set of fines. Again, penalties, interest, fines. So there are costs associated with misclassifying the individuals. One of the things we are seeing more and more of is states are now getting involved with this classification status. And we are actually seeing many of our clients, a number of our clients have actually moved to moving what were contractors off of that status and onto employee status, because in actuality, that's what they are, because they've seen movement in their own state where maybe their business colleagues are seeing the state come in and reclassifying. So we've seen a couple of our clients proactively go in and actually change independent contractors who are truly acting as employees and converting them to employee status. So you also want to make sure that you understand what the rules are in your state, because unfortunately they do vary state to state. So you have federal rules. So you got federal IRS rules, you have federal Department of Labor rules, and then you may in fact have different rules in the state that you're located in. So you want to make sure you understand what the various rules are. So some of the pros and cons. An employee, you can control what they're doing. You can tell them to be here on this day at that time. They're going to be there for 4 hours. They're going to do XYZ. This is how they do it. And in many cases, you have potentially a little bit more of a long-term loyalty from that employee. Again, they're getting paid in most cases weekly, bi-weekly on a set schedule. It doesn't vary week to week. It's going to be the same every week, every other week, however your payment schedule is. It may in fact cost you more. So kind of one of the cons is that it might cost you more to have employees because there are payroll tax costs associated with that. Or you may potentially be offering benefits. So you might be offering healthcare, or you might be offering a retirement, a 401k, something to that extent where you're matching a percentage, 3%, 4%, 5% of their salary. So they're may in fact be more dollars associated with having an employee than a contractor. Now, your contractor is going to have more flexibility, right? They're going to have, in some cases, they will have more lower overhead, and you will have lower overhead too, because now you're not carrying benefits for them. You're not paying payroll taxes on those individuals. So again, it's a less of a financial burden for you than an employee. But now on the flip side, you have less control. So for example, you can't tell this individual you have to be here on Tuesday morning at 8 a.m. And you're going to do X, Y, and Z for 4 hours. Like, you don't have that control over what that contractor is doing. And therefore you have to almost be willing and able to wait for when they're available, right? So that's one of the challenges with having contractors or independent contractors. You have to, in some cases, again, you have to meet halfway when you're trying to build a project. You've got to meet halfway in terms of actually getting that project done on budget and on time. So you need a contractor who's going to get to your project in a timely fashion. But in most cases, you don't necessarily have control over them starting on Tuesday versus Wednesday versus Thursday, etc. You just know that you need the electrician to come in, the plumber to come in, the framer to come in and do XYZ on your project. So again, there are pros and cons to both. You just want to make sure you understand what they are, and then also what the regulations are in your particular state, so that you are in fact compliant with whatever happens to be the rules in the state that you're in. So a couple tips for you to stay compliant. You want to keep detailed contracts. So for example, if you have an employee, you want to have an employee contract with that individual. If you are using a sub or an independent contractor to sub the work out to, you in fact also should have a contract with that sub to do the work that they're going to do for you. So now you've got a detailed contract reflecting either way, whether it be an employment contract or an independent contractor contract. You have it basically broken out what exactly is that each are going to do, each are responsible for, what kind of the rules are engagement for working with either one of these individuals. In many cases, the reality is contractors, people are treated as contractors all the time, and they really probably should be employees based on, again, the control test. And that's a big, behavioral control is a really big piece of it. So you need to stay away from treating everybody as a contractor, especially if you're telling them on Tuesday morning at 9 a.m. they need to be here to do XYZ. We always recommend that you work with a payroll service. It's so much easier to have the payroll service handle both sides of it. Handle the payroll side, so that weekly payroll, remitting the payroll taxes, taking care of all of your quarterly payments, all of your quarterly filings, your compliance filings, your annual filings. That really should live with a payroll provider. On the other side of it, when it comes to some of your contractors, you also do have the ability with some of these payroll providers to pay subs out of there. So that might be an opportunity for you too, to kind of keep track of it separately, but you have contracts for the work that you're doing with these individuals. Your subs, especially in construction, if they're independent contractors, they're carrying their own insurance. They're carrying their own liabilities, their own umbrella, potentially their own workers' comp, depending on what state that you're in. So if the person that you are contracting doesn't have their own insurances, in many cases, they are not actually a real subcontractor or a real independent contractor. They're an employee of yours. So we always recommend you work with a payroll provider to help you kind of classify who these people are, or work with your local accountant, your CPA, your EA, someone who understands the difference between the two and can help you to classify the people appropriately. And as always, you want to make sure you're compliant from an insurance standpoint with your workers' comp if you have to have that in the state that you're in. Again, if your subs can't present a certificate of insurance that they have their own workers' comp or their own liability insurances, you will in fact be liable for those individuals and have to pay for those individuals under your policy. So again, it can get a little bit more expensive to have those contractors if they are in fact not really contractors, because you're paying more on your insurance policies and so on. If any of you have any questions, please feel free to drop them in the chat. We always look forward to hearing from you. As always, sorry, as always, have a wonderful weekend, and we'll see you here next week.